Are you a broke loser? Do you want to stop being a broke loser? Well, buy my book on Amazon. It's $2.99 for an ebook or $9.99 for a hardback. It's called Stop Being a Broke Loser. If you buy this book, you will no longer be a broke loser. So buy it now. Communism is so great, oh yeah. Russian stocks are looking delicious, but should you buy them? Probably not, but you can if you want. Did you like that? Welcome back to Strongman Personal Finance. I am Christopher Bell, certified public accountant, long-term boglehead investor, author of the book Stop Being a Broke Loser. It's on Amazon for $3. Oh my god, I'm supposed to rip off. Oh my god, grifter. And a little suspicious of Russian stocks. However, I was on Everything Money software, just looking around, just kind of poking around, beep, 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 boop, beep, boop. And I saw this stock, QIWI PLC. I was like, what the heck is this crap? So I went and looked, and I said, okay, QIWI PLC is engaged in operating electronic online payment systems. So kind of like Russian Apple Pay or something. In Russia, Kazakhstan, isn't Borat from there? Moldova, Belarus, Romania, the United Arab Emirates, and other companies, and provides consumer and small medium enterprises financial services. So, their revenues are payment services, consumer financial services, Rocket Bank, and other. Okay, so basically it's kind of like a financial services payments processing company. Now, what always catches my eye with any stunk is a low price to earnings ratio. That's not the only thing that matters, but that's what cues me in initially. Low PE ratio, high profit margin, 23%. It's pretty freaking good for a bottom line margin. Gross profit of 45%. Return on invested capital, 11%. 5-year return on invested capital, 17%. And on top of that, I'm not a technical analysis trader. But if you look at the stock price, I mean, this stock has been getting freaking hammered pretty recently. So it tanked. I guess, is that during the virus? It tanked during the virus, and it had a massive run-up. And then it freaking sold off. I don't know if it had a bad earnings season, or Russia did something stupid, or what. But let's go look at the income statement. So as you can see, if you go back to 2012, and then you look all the way to 2021, it's pretty massive revenue growth. That's 10x revenue growth over 9 years. So, let's see how fast it grew over the last year. Let's see, 5, 6, 8. I like to do this because sometimes the software doesn't necessarily capture everything because it does like 1 year, 5 year, 10 year, or something like that. Sometimes I like to look over the last 2 years or 2 or 3 years to see how it's really been growing pretty recently, okay? Because you can always have 1 year that's like an aberration. So it grew at 9% over the last year, and then 20% before that, and then 37% before that, and then 26%. So growth, it looks like it's kind of slowing down a little bit. I don't know if that's just because of the pandemic-o, or if that's like a long-term trend. That's something you might want to research. But when we do our estimates, we're going to be very conservative. Let's stock analyzer tool. And we're going to see if this is a buy from a fundamental level. Okay, so revenue's been going up, but revenue growth has been slowing pretty dramatically. I don't know. Gross profit. I wish they had freaking horizontal and vertical analysis in the software. That'd be a huge improvement. Net income has been increasing. So profit margin over the last year was 137 divided by 568, 24%. Profit margin the year before, 72 divided by 518, 13%. So it actually went up. It's pretty freaking good. Profit the year before that, 64 divided by 431, 14%. So it's a pretty profitable company. Better than most companies out there. Average basic shares outstanding. So it looks like they've been issuing shares, but it's been really slow. So they had a huge share spike in 2016, it looks like. And then ever since then, it's been kind of like creeping slowly and slowly and slowly up. Earnings per share, It's been going up over the last 5 years pretty consistently. You know, I mean, like from a fundamental standpoint, this stock doesn't look that bad, but you have to still type in the assumptions. Balance sheet, whatever. I don't really give a crap about the balance sheet, to be honest. I mean, current ratio, so you have current assets, 217. So you basically have roughly a 2 current ratio, which means this company's not going to go out of business for at least 2 years. Maybe. We'll see. So cash flow. Cash flows from operations have been freaking exploding. Jesus! So if you look from 2019 to 2020, well, actually, no, they've been going down. Jesus. What's going on here? This is freaking random. So if you look in 2018, they had cash flows from operations of $57 million. And they had a massive run-up in 2019. I don't know what freaking happened in 2019. And then a massive drop in 2020. And then a massive increase of 63. So I would use a $287 million one. Maybe I'd use the average over the last 5 years. That'd probably be helpful. Same thing with free cash flow. So the average free cash flow has been $93 million. Maybe bump that down a little bit because it looks like there was two. Looks like this aberration year right here could have really thrown a wrench in that. So I'd maybe use 70, 80 million, something like that. Just my guess. Okay, let's look at the 8 pillars. All checks except for shares outstanding, but really not that bad. And cash flow growth. Okay, whatever. Stock analyzer. So here's the assumptions I did. So that's why I said I like to look at the year-over-year growth to see what's happening. So basically they had massive growth and then it's kind of slowed down. So to be conservative, I went with 8%, 9%, and 10% over the next 5 years. Share change, I said worst case 1% issued per year, all the way down to 0. Profit margin 12 to 18%, but it'll probably be higher than that. Free cash flow is a percentage of revenue, 9 to 11. PE, because it's Russia, 6, 8, and 10. Price to free cash flow, 7, 9, and 11. And of course, I always want a 15% return, okay? Because I'm strongman in personal finance. I don't buy individual stocks unless I have a pretty good assurance. So if you look here, I mean, this stock is basically a screaming buy, at least from a fundamental standpoint. Now, with that all being said, I don't know. I'm not going to jump into the stock. Maybe if I do more research and actually understand it better, I'll speculate in it. But it has caught my eye because it's so freaking cheap. But of course, that's because it's based in Russia. Mother Russia. So, with that being considered, what do you think? Are you going to buy this stock? You going to buy QIWI, the Russian payments processor, the communist stock? Or are you going to be a coward and buy Amazon? Anyway, that's it. Like, subscribe, tell your friends about me. Y'all have a wonderful day.